So the topic we are going to discuss today is interest rate risk in debt funds. We have industry expert Mr. Hariharan with us today. Sir, can you please elaborate on this?
Ignoring interest rate risk in the fund or duration of the fund. So that's again an important point. As I said, interest rate changes, prices move in opposite direction. So timing becomes a bit of an important point here. Today we are looking at an interest rate peak. Maybe 2-3 months back, we were expecting that RBI will start cutting interest rates in this year itself. Today the commentary seems to have changed. Today we don't see RBI cutting interest rates before Q1 of next financial year. So that's how it has got a bit delayed, which means this higher interest rate scenario is going to sustain at least for the next 6 to 9 months in the country. And therefore, that's an opportunity to lock in to certain debt mutual funds at these high interest rates. Because if interest rates come down, you will also face a fall in interest rates in some of the debt mutual fund. If interest rates come down, some debt mutual fund will do very good. They will give very good capital appreciation. Okay, so look at interest rate risk. Gilt funds can be extremely volatile. Gilt funds are funds which will invest 80% of the money in government securities, and therefore the thought process is that because the money is going into government securities, it will be completely risk-free. Credit risk is not there. Interest rate risk is highest in a gilt fund. So you need to be wary of it. Otherwise, you could face significant capital losses. So to consider the interest rate risk, you look at certain parameters like modified duration, which basically is a measure of the interest rate sensitivity of the fund. So if the interest rate changes by 1%, how much will the price of the debt mutual fund change in the opposite direction is what modified duration tells us.
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free, and you can find the link in the below description. Please like and share, and do subscribe to Holistic Investment.